Hello, everyone. This is Mike Banner, and welcome to another episode of 62 Who Knew, the podcast that brings you and prepares you for every aspect of retirement, or if you're already in retirement, helps you have a higher quality of life. And not just with advice, but with actionable advice that then leads you to the 62whoknew.com website, where you can access the professionals and services that are needed to have the best quality of your life, to make the last 30 years of your life the best 30 years of your life. So welcome back today. I want to say, of course, welcome back to Matt McCann, president and founder of LTC News and one of our national sponsors.
Thank you for having us.
Very welcome. Jon Thomas, national vice president and in charge of special projects of Amada Senior Care, one of the premier senior care companies in the country. Welcome back, Jon.
Happy to be with you again, Mike.
Thank you very much. And our guest, our specialist today, Mr. Shannon Hicks, who is known throughout the country as an absolute expert on all things concerning the use of home equity during retirement, which is the polite way of saying reverse mortgages, because those two words, when you say reverse mortgages, tend to make many people in the public, as well as in the financial world, go, no, I don't want to talk about reverse mortgages. But today, we're donating the entire podcast to it. Let me give you a little background on Shannon. I've been proud to know him for close to 20 years. As a prominent commentator at HeckhamWorld.com and co-founder of the software as a service company, Reverse Focus, Inc., Shannon Hicks has played a pivotal role in reshaping the conversation around reverse mortgages. His unique perspectives and deep understanding of the industry have not only educated countless readers, but also have contributed to introducing practical strategies of utilizing housing wealth with a reverse mortgage. Shannon's journey into the world of reverse mortgage began in 2002. Obviously, he was like 10 years old, as an originator, and his prior work in the financial services industry. Shannon has been covering reverse mortgage stories since 2008, when he launched the podcast Heckham World Weekly. Later in 2010, he began producing the weekly video series, The Industry Leader Update, and Friday's Food for Thought. So glad to have you, my old friend, and I don't mean old chronologically, but just in time-wise. So glad that you're here with us, Shannon.
Thank you. Both do apply. Great to be here with you, Mike, and with Jon and Matt as well. So my pleasure.
Well, we're going to get right into this because as you and I live every day, Shannon, the words reverse mortgage still, strike fear in people's heart. And I say this all the time. In fact, if I had $1 for every time I said this, I probably wouldn't need to be doing a podcast at 66 years old. I'd be sitting on a boat, and you and Jon and would be with us, and we'd be enjoying life. But no product, no financial product in the history of history has been surrounded by more half-truths and misinformation. And that is what is so frustrating to a dinosaur like me. I mean, granted, 30 years ago, the reverse mortgage wasn't a great product. I admit that. People don't like when I say that on LinkedIn and Facebook and TV shows and when I write for big publications, but it wasn't.
No.
But the changes that have been made since 2009 have made the reverse mortgage, and this is not Mike Banner saying this, little Mike Banner. There are Nobel Prize winners in economics saying this, that other than Social Security, the reverse mortgage, today's reverse mortgage, could be the biggest help to the senior community since the Social Security Act. Yet we still can't get that message to the public and to the financial planning world and to the long-term care insurance world. Matt, I'm pointing towards you, and to the in-home care world and Jon Thomas. So talk to me a little about your perspective of that frustration that we still live every day.
Well, I want to say thank you, Dave Ramsey, for continuing to spread misinformation about the reverse mortgage. My sincere gratitude. No, on a more serious note, it's interesting. The misperceptions about the reverse mortgage are abundant. And part of that is the counterintuitive nature of the loan itself. because as human beings, we're adverse and very resistant to anything that is the opposite of what we've done. And, for folks that have paid down their mortgage for decades, 30 years or more, usually more if you've refinanced or purchased a new property, it's like a forced pension savings program because that amassed equity is a source of wealth. And more financial professionals are now beginning to recognize it as a potential source of funds, which could be tapped or maybe not, depends on the individual situation. But that is really, in the nutshell, the power of the reverse mortgage. But, the irony is that this program, the home equity conversion mortgage, which I just want to be clear to our viewers and listeners, is the FHA-insured HUD supervised program created by the federal government. And the idea actually came from a UCLA professor, Young Peng Chin, and he pioneered the whole idea of this. So brilliant man. And so he actually worked on the special committee, a Senate committee on the elderly and aging. And so he really came up with the idea for the reverse mortgage.
That's incredible. Yeah, I never knew that.
Yeah, he's the godfather of reverse mortgage, as I call him.
How old? Yeah. How old is he?
I don't know his age right now.
Is he alive?
I would hope so.
I want to get him on the show.
Well, he's a brilliant man, but he was a gerontologist, not just an economist, but a gerontologist. And I think for John and Matt, that really is a powerful combination. I think we would agree for someone to really look at aging in America.
And that surprises me because when I think of reverse mortgages, I think of Tom Selleck, late night TV, and something scammy.
Right.
How did that perception start?
Yeah, I think the television ads are a double-edged sword, and so they do increase awareness. Tom Selleck, we even had the former Senator Fred Thompson.
The
Fonz.
But the
early days,
the Fonz.
Yeah,
Robert
the Fonz.
Wagner.
We had the Fonz in there, and then of course we had Heart to Heart, Robert Wagner. So we had some early sponsors, but part of I think the waters got polluted, gentlemen, because the federally insured reverse mortgage has pretty much been generally the same structure of the product, but at the same time, you had a lot of these companies doing these equity sharing arrangements, which I would say were a little scammy as far as the abusive amount of money they would take from somebody who's cash poor, and house rich. And so those became kind of synonymous unfairly with the federally insured reverse mortgage.
Yeah, people don't realize that SEMs, shared equity mortgages, they were marketed as reverse mortgages, Matt and John, in the 60s, 70s, and 80s. So, people, were getting to the will reading. Mom and dad are now gone, and they're expecting to get $300,000 in equity. And the lawyer or whoever says, well, you're getting half that. Well, where the hell is the other one half going? Where's the other 150,000 going? Well, that's going to MetLife Savings. I mean, that was one of the people that shared equity mortgages. And therein is the birth of, oh my God, if you do a reverse mortgage, you're going to lose the equity in your home. You're not even going to own your home. And it's today's reverse mortgage. Well, I shouldn't say that. The reverse mortgage has never done that. And they never should have marketed those shared equity mortgages as reverse mortgages.
The funny thing is a reverse mortgage is simply an FHA loan with optional payments. That's it.
Yeah.
I mean, there's more moving parts than that, but just the brass tacks of it.
Shannon, we're at Amada. We provide care in home, and we counsel families, and we work with families as their loved ones and seniors are receiving care and towards the end of life. And often we'll provide care for a family and they spend up to their last dollar, right? And you have to have that hard conversation regarding how they're going to continue to afford care. And, most seniors, when they're in that moment and you start to explore, hey, you have equity in your home that you can use to continue to afford care. Yes. Their initial response is that they would rather go without, right? They would rather figure out some other way. And I think there's a psychological element where in their mind, hey, I've spent everything I have. My home is the last thing of me that I have to pass on. right, that I have to gift my kids. How do you address, as somebody that educates in this market, how do you address that psychological element that seniors kind of hold on to?
Yeah, sure. Thank you. That's a great question, John. I call it the inheritance illusion, because it's a very noble and altruistic thought to give this home to your children, right? Your legacy, and we all want a legacy of some sort. But more adult children now are realizing that mom and dad, we want them to be taken care of, and if they're not, the sandwich generation, folks my age or our age, are finding ourselves partially supporting our parents, which we don't mind doing. But when I come up against that kind of objection of the inheritance, and to say, well, do your children need to inherit this home, or do you know what would happen with the home? Often it's more of a burden, believe it or not, to inherit the house, because then they have to dispose of the property, get a realtor, et cetera. And then it can even create problems with the other siblings when you have to do the division of the assets. So the good intentions, as we know, a road to somewhere is paved with good intentions. That can be a problem. But we always tell reverse mortgage professionals, we want to be very respectful of that desire. But in the end, the inheritance, it can be done too. They could use just part of the reverse mortgage to maybe supplement those payments for the services that you offered, long-term care or home care services, and then there still would be equity, because if they don't tap it really heavily in the beginning, that home's still appreciating, even with a loan, just like a 30-year mortgage.
And I'd like to bring up another. I know, Matt, you look like you have something that you wanted to ask, but I want to bring up something else too that I firmly believe. I think what you asked, John, to a degree, is a self-fulfilling prophecy. When I went into the business 20 years ago, the greatest generation, which, as you all know, because I speak on it and I wrote a book on it, is my favorite people. They are and will always be the greatest generation. Well, there's not many of them left. And there really isn't. There's probably about 150,000, and they're dying at, the greatest generation now is 88 to 100 years old. This is the World War II generation. And they'll probably be gone in the next year or two or three tops. And that generation would rather go without than do something with their home. But there's 4 professionals on this podcast right now, and most of our clients are not between 88 and 100. The next generation, and I tend to use wars, sorry, I'm old. The Korean War generation, because I deal with these people, I'd love to leave my children something, but you know what? I love them, but they make more money than I do. How much can you give me on a reverse mortgage? And then if you go a little further down to the Vietnam War generation, and I always have to say this, one of the greatest generations, the only generation that this wonderful country did not treat correctly. I always have to say that. It was very meaningful to my father as a World War II ex-POW. His heart always went out to Vietnam veterans, because this great country didn't teach them well. They're a little more blunt about it. Hey, I love my kids, but I won't say F them. But when I'm dead, I need to live a life now, okay? Yeah. And then baby boomers, which I'm an old baby boomer, they're pretty much, and I have, because I still write a lot of reverse mortgages. I go, do you want to discuss this with your children? Why? When they got their last mortgage, they didn't discuss it with me. It's not that they don't love their children. And I want to leave a lot to my 3 children and my 4 grandchildren. But my 3 grandchildren my 3 children who range from 31 to 44 years of age would be the first one to say, Dad, we want you to go to Vegas. We want you to drive a Corvette. We want you to go on cruises. And we couldn't care less whether you leave us money. So I think that self-fulfilling prophecy in the long-term care insurance world and the in-home care world just keeps it going. You don't have to worry about people in their 60s and 70s going, no, I can't touch my equity. They're going to go, really? Because I only have $12 in my savings account, and you're telling me you can give me a $100,000 line of credit? I personally think they're going to be happy to hear that. My take, that's all.
First off, I think everyone cares about the money. Even when they tell you they don't care about the
Well,
money. They
especially
care about the
when
money.
they tell you. Every salesman knows when somebody
So,
says
it
not the money.
is always about the money in one way or the other. And a lot of our listeners are obviously people who have not yet retired, could not get a reverse mortgage, but they may have living parents who are older, who fit the age demographic. And Shannon, I want you to kind of quickly go through that.
Yeah.
But they're talking to their parents, and they see their parents' health declining. Maybe they're financially strapped a little bit. Most of their savings is in that house. What kind of conversation should they have with their parents? Because you mentioned things, equity is going to go up because, value of homes go up. Well, that's not always the case. What happens? Okay. It's because it's all about the money. Is really a reverse mortgage just about not paying your bill? Meaning there's no mortgage payment. So kind of talk about some of these things, because I think for a good part of our audience, they're hearing this and they just hear that little bit, that negative bit out there, and they really don't understand the basics.
Absolutely. To answer the demographics, there's the federally insured reverse mortgage. The youngest borrower must be 62 years of age or older. And over the last decade, the average age, the median age of a federally insured reverse mortgage borrower has been trending younger. So that's been a development, like more of the early 70s, and I think we'll push into the late 60s here soon. But then there are proprietary or private reverse mortgages, Matt, that can be that are offered by companies such as Longbridge or Finance of America, which are usually for higher valued properties. I guess you would call them a jumbo. And those are for individuals as young as 55. So that's which, I'm 57, so I'm like, oh, that's interesting. I qualify for a reverse mortgage. I never thought I'd hear myself say that. But to answer the question, the conversation with the children, I think that's a great thing. I think, the children taking the pressure off mom and dad just by saying, listen, whatever you guys need to do to fund your long-term care or to fund your retirement, even if it means tapping into the home, mom and dad, we're all for it, And then I think that kind of opens the discussion and maybe takes some of that angst or guilt from the homeowner.
And I've always looked at it, and you've heard me say this, Matt, probably more than John, but John's heard me say it too. The reverse mortgage world is not here to hurt your heirs or your inheritors. But I'll tell you, as a reverse mortgage person, I couldn't care less. You're my client, and I want you to have the highest quality retirement that you possibly can. And I've said this on TV shows, and you've all heard me say it. If your children are the type of children that will put the size of their inheritance in front of your quality of life, well, I'm sorry you have children like that. I really am. I'm from the heart. I'm not being sarcastic. Now, but I feel that way. I mean, if somebody, and I've heard people, not very often, say to mom and dad, look, I know you need this on a phone, but really and truly, I was looking forward to having that house free and clear when you, really? And you know what my answer is? I don't want to do your mom and dad's reverse mortgage. They need an extra $1,000 a month. Can you give them the $1,000 a month? Well, no. Then hang up the phone. Now, it's easier for me to do that because my card always says president. I wouldn't let one of my loan officers say that. That would be rude. But I have met so many great people in our industry, Shannon, reverse professionals and clients and children. And of course, to us, children are people in their 40s and 50s now that just look at their mom and dad and go, why are you even asking me? I mean, you worked so hard to put me through college. Yeah, I remember when you were out of work and you made sure we never did without. Mom, do whatever you have to do. So again, this idea that the inheritors or the children or the heirs have a problem with this, I think it's 98% self-fulfilling prophecy from the old days. It just doesn't exist anymore unless your kid's a prick.
Shannon and Mike, I'm hearing this, and I can hear voices in my head. And I took my meds this morning, so it's not that. But it's like, it almost sounds too good to be true. It's like, what am I missing? I get this mortgage. I either get money or don't have to pay my mortgage, but I don't lose my house.
Yep.
What's
Go, Shannon? Go, Shannon.
What's the catch? There's got to be a catch.
Oh, yeah. And great point. And that's, I think, really important for the reverse mortgage professionals and for the homeowners listening and watching today. I'd say if it sounds too good to be true, and that's always going to put up our defenses, and it should. But with a reverse mortgage, the least the federally insured, it's FHA insured. That is, if you're not making payments, so the trade-off is this: you're slowly consuming equity in the home, and you're going to do that over time. But your home continues to appreciate. I mean, the market doesn't know if you have a mortgage on your house or not, right? The housing market just says, hey, your home's appreciating. Sometimes it won't, but the trade-off is if you're not making any payments, Matt, then the homeowner is having what's called, I call it pure negative amortization, meaning that the previous month's balance, the FHA insurance, and the interest become part of the new balance, and then that becomes, and it just rolls over each month. So they project that in a reverse mortgage illustration to print out, basically, that shows them, hey, this is where your balance will be. Very easy to predict if it's a fixed rate. We do have adjustable rate reverse mortgages as well, but that kind of shows, okay, this is what the trade-off is. So definitely, and I'll say this very, very strongly, a reverse mortgage does not eliminate debt.
That's right.
And there's people that have rightfully gotten in trouble for saying that because, and I want to let the consumer and the homeowners watching know that is never true. If you see that, run. It transfers debt or converts debt into a new loan. So a reverse mortgage is certainly incurring a debt because there's a repayment at some point in the future. But the trade-off, Matt, is really that that balance is silently growing each month and each year.
So does that mean if I'm the homeowner that at death could I have nothing left?
Could you conceivably well with a reverse mortgage? Let's say you got all the money and you pulled it out. If somebody spent it all right in the beginning, or maybe they paid off their existing mortgage, because a reverse mortgage, the federally insured reverse mortgage, requires that you extinguish or pay off the existing mortgage balance. And so if you do that, you've enjoyed the benefit, and you will continue to, as long as you remain in the home and meet the terms of the loan itself. You'll enjoy that increase in cash flow by not making that required monthly mortgage payment. But you're also going to be having that trade-off of accumulating that balance. So yeah, there's a trade-off.
But is there a restriction? Is there a restriction on what I can do with the money?
Generally speaking, no. There's a restriction on how the salesperson interacts with the homeowner. They cannot require them to invest it in certain products and home improvements or purchase an annuity. There's restrictions. But as far as the homeowner, no. It's funny. I always encourage, hey, now that we've paid off this debt, let's not rack it back up again, right? Whether it's consumer debt, and this is where behavior and psychology really comes into play.
And Matt, also, I want to bring up math, because a lot of times, of course, we give our amortization schedule. It's not only required by law, but morally and ethically, how could you not show people what's happening? But when somebody looks and goes, so wait a minute, is it possible? Your exact question, Matt, that I may have no equity left if I live another, I'm 68, if I live to be 80, is it possible? Yes. Well, how do we rationalize that? I go, well, let's think about this. Rates today are in the 6s and 7s. I'm going to do you a $150,000 reverse mortgage. Your payment would be approximately $1,500 a month. And this is easy math. $1,500 a month times 12 is $18,000 a year. You're asking if I live for 20 years, maybe there won't be equity to give to my children. But you received 20 years at $1,500 a month. That's $360,000. So it's not that the equity disappeared. You spent it. Now, maybe you put it into crypto and made $10 million. Maybe you paid off your grandchildren's student loans. Maybe you hired Amada and got in-home care when you needed. Maybe you took $100,000 and did a single premium life insurance with a long-term care rider. But
is that legal?
Yes, of course it's legal. Long-term care insurance and life insurance is no problem. Annuities gives the feds a problem.
And just I want to add real quickly about that, because you've mentioned earlier, Matt, what if the housing market goes down? And we all know it can, and we all remember 2008. I think a lot of people have amnesia about that, quite honestly, now. They're behaving as if home values never go down. But I've saw a number of reverse mortgage borrowers who had their home value just drop by 30, 40% or more in 2008 and 9 and continued to fall. And they still received their monthly payment if they were getting a monthly payout from the reverse mortgage, which is one of the payout options. They still had access to their line of credit. And their line of credit, the unused portion of the line of credit in the federally insured reverse mortgage continues to grow. So it was almost like a safety mechanism. One gentleman was a retired CHP officer, and he realized that he had more money in his line of credit, and he would come out on top if he yanked every penny out, rather than just selling the house and then losing access to that credit line. So he stood to make more money by pulling all the money out of the reverse mortgage line of credit than just selling the home and leaving that money on the table with FHA. So those are some scenarios where it can help in a down market.
I want to bring up something very important, but first we're running just a little behind on our messages. And I do want to talk about Ms. Cassandra, who is not here today. She's usually always here. She is the president and founder of Platinum LTC Solutions, which is in the top 2% of the long-term care insurance world in the country. Platinum Long-Term Care Solutions lends a combination of expertise and compassion that's so important to your long-term care insurance decision. Ranking in the top 2% of their industry, they have bringing expertise to you and your family for many years. They have a free, no hassle process, and free based on your unique situations and concerns. Their long-term care specialists shop all the top insurance for the best rates in the country. You don't have to shop it, they do. And of course, to contact Platinum Long-Term Care Solutions, go right now or right after the show to www.62whoknew and hit on the long-term care insurance link, and you will get to that top 2% echelon to take care of you and your family. I wanted to bring something up also. You said, and long-term care people, they have this in their mind, and rightfully so, by the way. When I said you could buy a single premium product, you could buy life insurance, you said, Matt, is that legal? Now, that's an unusual question from certain people, but not from insurance people. And why? I used to think that Dave Ramsey was one of the most evil people in the reverse mortgage world, and he is. But the truth is, there's a nice lady by the name of Claire McCaskill, who was a Democrat from Missouri, was a congresswoman, I think until she's 113 years old, was in there for God knows how many terms. She is no longer in there. And in 2009, as part of HERA, the Housing Economic Recovery Act, and I think, Shannon, this is where the reverse mortgage world took it up to you-know-what, and we would be in a totally different world if it wasn't for this. But that 11,000-page bill, HERA, the Housing Economic Recovery Act, that was supposed to save America, introduced by President Bush, brought into action by President Obama, was going to bail out America. Well, we all now know, 15 years later, it bailed out Wall Street. It did nothing to help America. We all suffered. But as part of that 11,000-page bill, Claire McCaskill took it upon herself before Dave Ramsey to become the antichrist of the reverse mortgage world. And she slipped in language into HERA, federal law, that the reverse mortgage, proceeds from a reverse mortgage, should never be used to purchase an insurance product. Now, she told Congress that it was going to say that, but not insurance product, annuities. And I agree with that morally and ethically, because in mortgage rates on reverse mortgages are always higher than the return on an annuity. So why would you convince a senior citizen to borrow money at X to buy an annuity that's less than X? Unless you're just a greedy insurance person out to make a commission. I agreed with that. We all agreed with that. But she didn't use that language. And instantly, from MetLife to Wells Fargo, to Citizens, to the biggest long-term care insurance companies in the country went, wait a minute, is it legal to do this through the reverse mortgage? And even though we got lawyers' opinion letters and congressmen to go, this was meant for annuities, negative cash flow, negative arbitrage. But the law doesn't say that. Claire McCaskill says it's all insurance. And that crippled the reverse mortgage world. And we're still facing it today with somebody as knowledgeable as Matt going, is that legal? Of course it's legal. Long-term care insurance is an investment in your future. Life insurance, you get a multiple of what you're putting in back. You don't lose, you win, unless you decide not to die and figure out how to do that. But I have spoke to presidents of huge insurance companies going, are you sure we should let you speak at my convention, Mike? I thought it was illegal to use a reverse mortgage to buy insurance. No. Bad, Claire McCaskill. I think that could be Dave Ramsey's first wife. I'm not sure on that. Don't quote me. Don't quote me on that. Okay.
It may have been where he got his education. Yeah.
Yes, it could have
And
very well
Claire,
been.
it is Michael Banner, Banner,
Claire McCaskill,
lives in
bring it
Florida.
on. Yeah.
Right.
Bring
You're
it
a
on,
fan?
Claire McCaskill. I'll let her on the show.
So for John and Matt, have you had instances where an individual maybe used monthly withdrawals to help pay for their long-term care services? Because we know that long-term care insurance gets extremely expensive if you try to buy it in your 60s, right? So they can pay for your services.
Go get him, Matt. Go get him.
Well,
get 'em.
John, answer the part with the care, and then I will fight back on
like
Shannon
that.
on the cost
All
of
right.
long-term care insurance. Go ahead.
The Thrilla in Manila. I love it.
Yeah.
That's right.
That's right.
All right.
Yeah.
Getting ready right now.
All right. I
Shannon,
love it.
absolutely. I mean, we have folks that we provide care for that, you know, as I mentioned earlier, they get to the end of their financial means, and a reverse mortgage really is, or home equity really is, the only other resource they can tap into, and so we have families that we serve that have utilized their equity to get a stream of monthly income, right, to pay for their care. I shared, I think it was our first or second podcast, I shared it even about my great aunt who is 104. And she's in that situation. She's been receiving care at home round the clock 24/7 for the last going on 10 years, and has spent all of her assets, and her home was the only thing that she had left. And so we did a reverse mortgage for her. And so it certainly is, I think, a really meaningful option, right? It's a very meaningful benefit for folks that don't have any other resources. And so we recognize it at Amada, and we certainly educate families on that opportunity. You know, one of my questions, and I've had a slew of reverse mortgages that I've been a part of and I've participated in. It is still a little unclear to me, and maybe I'll ask this question before you jump into it, Matt. What is the underwriting look like? What does the loan qualification look like? Because we serve, of course, families from all walks of life, all backgrounds. You know, some seniors have little cash assets before they need care, right? In a reverse mortgage or home equity is the only option, right? So, is it like a traditional mortgage? Is that senior's credit score going to be looked at, right? What
question.
Qualification things are part of this opportunity?
Yeah. So for our viewers and listeners, the process way back in the old days was you basically had to fog a mirror, which it made the process very simple. Are you alive? Yes. But didn't always serve the best long-term needs of the older homeowner, because they may not have the financial capacity to continue to meet their ongoing obligations, which are required, by the way, in a traditional mortgage, of paying their property taxes, right? If you don't pay property taxes, even without a reverse mortgage or any mortgage, you can get foreclosed on. So we want to make sure that individuals who got a reverse mortgage could continue to meet those obligations of property taxes and insurance. So what they came up with about 2014 and 15 was we had the financial assessment, and it's not really a credit score per se, John. That's a great question. It measures one's financial capacity and willingness to meet obligations, and they do that by looking at payment histories of property taxes. What's their residual income? Can they continue to stay in that home? Because one of the conditions of not having the reverse mortgage called due and payable, like any mortgage, is you have to keep paying those. So we don't want to put people, especially those in retirement, in a worse position by getting a reverse mortgage. So that really helps kind of weed it out. There are some options to help alleviate that risk, and one of them is what's called a lifetime expectancy set aside, which kind of calculates this is how much money you're going to need. It's not going to be right, I can tell you, for property insurance, right? Because it keeps going up. But at least it has that set aside of funds that are not available to be borrowed, but they're there for the purposes of meeting those obligations.
It's very difficult, John, to not qualify for a reverse mortgage. If you have the equity, we're going to find a way to do that mortgage. I'm just going to say that. And I also would be remiss if I didn't say that one of the many, many examples of how Amada Senior Care leads with its heart is we have entered, when I say we, American Pacific Mortgage, the company that I'm affiliated with, a national joint venture with Amada Senior Care to offer reverse mortgages, to train their hundreds and hundreds of franchise holders throughout the country, tens of thousands of healthcare workers. We have created training videos, a live hotline. So if you're sitting in someone's house, and I'm not aware of any other in-home care that has done what Amada has done. I mean, they can have someone sitting in a house who needs care, and if that person goes, I just can't afford it, they now have options, whether it's online or email or an 800 number to go, wait a minute, let's talk to a reverse mortgage person. Just another example of Amada, as I said, leading with their heart, because I don't know any other company that's done that.
So why we get calls just like Amada does at LTC News, and I know long-term care insurance specialists will get calls in families in crisis, okay? Mom, dad, whomever needs care. They didn't buy long-term care insurance. There is limited resources. They start talking to people, and they say, you're going to have to go on Medicaid, blah, 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 blah. And no one is asking the next questions about, home equity and reverse mortgage, which in a way could protect that asset by providing the money to pay for quality care at home without spending through that, leaving literally nothing. I don't get it. Why?
Shannon, you answer that because you'll do it professionally and politely, and then I'll do it a little less professionally and politely. Go ahead.
Well, and one thing, Matt, just to be fair, and I'm trying to be ornery and devil's advocate at times about long-term care premiums, because I've gotten quotes, but they can pay for that care with the proceeds from a reverse mortgage, right? And then they can also pay for the long-term care insurance premiums or the care directly. So you're right. People usually wait till there's a crisis. So the question was really, how do we avoid that? Is that really what you're asking, Matt?
No, the question is, why are there so many professionals out there, financial advisors,
right,
whomever, that their advice is, I'll just, liquidate the house and go on Medicaid. Yeah. It doesn't make sense.
It doesn't. I have a term for this. It's called asset blindness. and they're more into looking at assets that they can count and quantitate on paper, such as, equities, 401ks, IRAs, whatever it might be. That's what the financial community at large, I won't say all, is really looking at. And they ignore what is traditionally the largest asset for most middle-class individuals is their home. So by doing that, I believe that that's a misservice to their clients, and it continues. And I also feel in some instances it's a violation of fiduciary duty.
Yes.
As a professional, if you are, if I go to the doctor and I have a chronic disease that may kill me, if he doesn't tell me about something that's right there in front of him, then I think that doctor is liable. And so that advice should include the home. Doesn't mean, again, for those watching and listening, it doesn't mean that reverse mortgage is the panacea, right? The cure-all. But it should at least be part of the equation.
Well, Matt, I'm going to give you a different answer, and then I'm going to let you take over, Matt, because one of the things literally for the rest of the show, with input from everybody else, because one of the, I'll go backwards a little more. This is directly to Shannon. Have you ever been to a national long-term care convention?
I have not.
Oh, it's
I've
okay.
been to FPA, but never to the
Okay.
national LTC.
If you go in the middle of the convention hall, close your eyes, you will think you're in a reverse mortgage convention because all you hear is people don't understand us. Why do they think it, we don't, that we have a 7% penetration, but there's 50 million people out there that need more. What's wrong? It's the same thing. If you're in a reverse mortgage world, why do people think they take my house? Why aren't we doing? Okay. But it's perception. The three strongest words in the world. My two ex-wives always bitch about this because I taught my children the three strongest words in the world are not "I love you." That's a close second. The three strongest words in the world are perception beats reality. Every time, from caveman days. Now, you said you shopped long-term care insurance and it was expensive, but it's not. That's a fallacy.
compared to exactly.
No, not compared to. I was in your boat until I met Matt, Cassandra, Peter Gelbwax, Mark Goldberg. It's not. That's the thing about long-term care that blew my mind 3 years. Well, I guess more like 7 years now, Matt. I don't know why I said 3 years. It's not expensive, yet the world thinks it is.
Yeah.
It's the same thing with reverse mortgage. We're going to lose our house. You can't lose your house. Just pay your damn taxes. Yet 9 out of 10 financial planners say you lose your house. Matt, you take over from here. Set the record straight.
I started turning red, Shannon, when you said, I'm approaching 60 years old, and long-term care insurance is expensive. No, it's not. Where did you hear that?
Not compared.
It is
It's
absolutely
just
not. It is a fallacy. There are many types of long-term care policies from various insurance companies. The premiums do vary widely.
Sure.
But number one, obviously the premiums are custom designed. Okay, the policies are custom designed. You get to decide how much benefit within a policy. And premiums themselves can vary almost double between insurance company A and insurance company B for the same thing.
Yep.
When I talk to clients or individuals who contact LTC News, and any top long-term care insurance specialist will say the same thing, and they make the recommendations. Almost all the time they go, gosh, I was thinking it's going to be $1,000 a month for a long-term care policy. Where in the heck did you get that? Well, the reason you get that is there are financial advisors and general insurance agents that have absolutely no clue what they're doing. So what they do is they go to, for instance, the LTC News cost of care calculator. They look at the cost of the nursing home and say, well, it's going to be $10,000 a month today. And in 2045, it's going to be $22,450. So we have to have benefit X growing at this percentage. Oh, yeah, the premium is going to be $1,200 a month. No one goes to a nursing home. Repeating. Most long-term care is not in a nursing home. And generally, most nursing home is either at the very beginning when you need skilled care, when health insurance or Medicare is paying for it, or end of life, last month or two at the end of life. Yeah. So with the exception of Medicaid, which does push people into nursing homes, even today, most care is delivered at home, adult daycare, and assisted living. And John, I want to address the plan of care, but most home care is not 24/7, based on my own claims and common sense. So most people get quotes for way over insuring just because of the benefit request. Yeah. And they don't shop. They don't talk to, someone like at Platinum Long-Term Care Solutions or another type of long-term care specialist that is actually process claims and understands how these policies get used. You say you're 57 years old, you can go to LTC News and the search engine put how much does long-term care insurance cost, and you'll see that breakdown. And you'll say, well, why didn't I do this yesterday? Well, actually, you should have done it 5 years ago or 10 years ago. Most people buy long-term care insurance between ages 47 and 67. Yep. It's affordable. When we talk about reverse mortgages and you can get it at a younger age, okay, if you have some cash flow issues, and you could easily pay for a long-term care policy through that, if you're healthy, of course, and none of your equity is going to be impacted at all.
Right. No,
Is-
So
thank you
dumb.
for setting me straight on
Isn't
that.
that
And I
am-
think
isn't
it's so similar to reverse mortgages because some salespeople in the reverse mortgage business at times have misstructured things where it is really expensive, such as encouraging someone to take a full draw. So much in the same way, I think, Matt, I've encountered people that have given me quotes that are just not really as skilled in structuring it properly and looking at the reality of it. So I'm glad to be wrong. So that's good.
There you go.
Well,
Yeah.
Shannon and Matt, I feel like I would be remiss if I didn't say, whether anybody has any misgivings, no matter how big of a policy or how expensive the insurance policy, paying for care out of pocket is way more expensive, extraordinarily more expensive. So if
Yes.
if you think the insurance is expensive, paying for care is expensive.
Yeah.
Pay me now, pay me later. Yeah.
But it gets down to the bigger point is that the general public, meaning listener listening right now, is often in denial. And this ties into reverse mortgages too. They're in denial of what's going on. They're in denial of aging. And I know, John, you've run into, or your people at Amada have run into people, maybe one of the kids say, mom needs care at home, and you get to see mom and I can do everything, and obviously that's not the case. They're denying something that is actually happening, much less projecting in the future. It's denial that is the biggest obstacle to doing any kind of planning.
And Matt, we're much more likely to need long-term care than we are to benefit from a life insurance policy or other things, right?
Absolutely.
Yeah.
The
Right.
amount of
So
people
what
that
are those
actually die
numbers?
with a life insurance policy is actually small. That's why they build all those big buildings.
Yeah.
Yeah.
Yeah,
No,
Shannon.
I mean, that's true.
Shannon, a lot of mutual friends to us and acquaintances, just unbelievably great people like Tori Lawson or Alex Pistone, and nobody knows who those people are unless you're in the reverse mortgage world. So I'm not name dropping. It's just me and Shannon having this conversation and our millions of viewers. But they've often said to me, you and your obsession with marrying reverse mortgages to long-term care insurance. I've been trying to do this now for 15 years.
Yeah.
And it just kills me that people not only don't understand each product, but I have friends, good friends, whose parents suffered because they thought they couldn't afford long-term care insurance. Of course they could have. Well, who told you? Well, that's what I heard. Now, I convinced them to get a reverse mortgage, but that's because I know their son for 20 years. And they go, really? You don't lose your home? I have so many goals for this particular show. Not this episode, but 62 Who Knew. We're going to have a myriad of experts, from annuities to life insurance to health, wealth, psychology, anything you can imagine. In this next year, we will have national experts on to talk about with our panel of experts. But if we could accomplish one thing at 62 Who Knew, it's the message that Matt just said. Everyone deserves great care as they get older. You don't have to be a millionaire. You don't even have to be upper middle class. You don't even have to have equity in your home. Maybe it's not a reverse mortgage, but Matt has quoted, and so has Cassandra, long-term care policies for my friends over the years. And when they've come back to me and said, and I'm just going to name a number, and of course it has to do with health and age, so you can't quote me. Matt told you were getting $6,000 a month in coverage? Yeah. And your premium was what? $162. I go, you sure it wasn't opposite? But it was. Now, they're young, they're healthy. That's not the 75-year-old chain smoker, but that's less than your cell phone bill.
No, it's so true.
And yet the public doesn't know this. It drives me crazy.
And I didn't know the long-term care, to be fair. And that's the whole thing you said about perception being reality. And that's why I'm glad you set me straight, Matt, is, we get maybe a wrong interaction or someone that really isn't doing things maybe in the best way. And same thing with a reverse mortgage. People think it's too expensive. So that website again for getting quotes.
Well, you can go directly to him. Go ahead, or you can go.
If everyone goes to the 62 Who Knew website, so that's www.62whoknew.com, And on that website has all the clicks where you can go to either LTC News, Platinum, Amada Senior Care, all that is on that website. And I want to just for a second, because it kind of piggybacks on this. And because often people do things in a moment of crisis. So mom and dad didn't plan. They've got that house. The reverse mortgage is there. And John was asking you about, care plans of care, because you could take a reverse mortgage and just get a little bit of money to pay for care during the day to provide respite for the adult children who are living their lives during the day. You don't have to have 24/7 care.
That's a whole show in itself, but go ahead, John.
Yeah. No, you're right. You're right, Matt. And it's always for us, you very rarely are we putting a caregiver in a home or sending caregivers in a home with a family and a senior that they're providing round the clock care, 24/7 care. It's always coordinated care with family and with loved ones, right? And that often looks like as little as 4 hours a day. Right, for maybe a daughter who has kids of her own and just needs support with mom or dad throughout the day, or 8 hours a day, right? You have working professionals whose parents need care and they need someone in the home while they're working, right? But mom or dad lives with them and they could use 8 hours of support or 10 hours of support a day, right? And that's manageable, especially if you have insurance or you're getting funding from your equity, your home equity, right? That's manageable. Once you get into, hey, we're talking 16 hours a day or 24 hours of care a day, then it gets quite a bit more expensive. And
so then let
it's
me
progressive in nature, right?
Let me ask Shannon then, as far as the design of the reverse mortgage, okay, if there is a concern about we want to protect equity, okay, the adult for whatever reason, whether coming from the kids or coming from the care recipient,
Yep.
can you get just enough that what you need to fund that plan of care? Or do you have to get whatever that mortgage would be in every month? How does that work?
Yeah. So, it's a great question. If they have a smaller mortgage balance, of course, that helps really mitigate the growth of the reverse mortgage loan balance over time. So if that's the case or their home's nearly paid off, we can definitely preserve a lot of that equity by just leaving it untapped.
That's right.
In a line of credit. Or even better, Matt, is that they can set up what are called tenure, like a tenured professor, 10-year payments, which last as long as they remain in the home and they meet the terms of the loan. So they could use those 10-year payments for any variety of reasons, maybe to supplement their care or for whatever they want. So that's how I would preserve that equity.
Something also, another big factor to remember. When I went into the mortgage business, I can't believe I'm saying this, in 1982, about 4% of the people in this country paid cash for their house. When I went into the reverse mortgage business 20 years ago, almost exactly 20 years ago, about 14% of the country was paying cash. Today, this is right out of NAR, National Association of Realtors, 35% of the homes in this country owned by 62-year-old and above people are free and clear. So to answer your question, Matt, that person has a $500,000, $600,000, $700,000 house. And remember, 20 years ago, that was a wealthy person. Well, that's a $300,000 house 6 years ago. Pretty much anywhere now, it's a $500,000 house. If they have no mortgage and they get a growing line of credit to fund Amada's in-home care, it's a line of credit. It's pay as you go. We may approve them for $150,000, but they're only using $1,200 a month, and they're paying interest on that $1,200 a month. Let's increase that. Let's make it $2,000 a month. Interest rates right now are in the 7s. 7% of $2,000 is $140. That's what it's costing, and they're worried about eating into their equity. But again, it's a fallacy. It's people don't think it through. It's different. I'm going to read something about LTC News, but Shannon, imagine this, and I think I'm quoting this correctly, Matt, aren't I? You have over 80,000 in-home care people in the LTC News
no,
directory.
the LTC News Caregiver Directory has 80,000 caregivers, home health agencies, adult daycare, assisted living, memory care, and nursing homes.
You just did your commercial. Thank you. And that, of course, includes Amada. But can you imagine, Shannon, now I'm just talking to you again, because I know your heart is in reverse mortgages. We just don't do this. It's too aggravating to just do. You have to have your heart in it. Can you imagine, it's not going to be in my lifetime, 80 some odd thousand caregivers, providers, communities getting it through their head that long-term care insurance is not expensive and using a reverse mortgage to fund it is moral, ethical, and the right thing to do for someone you love. I don't know if any of us will be alive when that message gets through to the masses, but I hope we can get it through. But let's talk a little bit about LTC News. Planning for the future, long-term care can feel overwhelming, but it doesn't have to be. LTC News is the top internet destination for American families to learn about aging, caregiving, health, long-term care, and retirement planning. At LTC News, they provide the tools and resources to help you prepare for future costs and burdens of aging and make informed decisions. Whether you're exploring long-term care insurance, researching care costs, or facing a family crisis of your own right now, LTC News has you covered. He just mentioned what those 80,000 plus people were. Caregiver Directory connects you to 80,000 caregivers, home care agencies like Amada, senior communities, adult daycare centers, assisted living, and memory care and nursing facilities. If you do nothing else today, go to www.62whoknew.com. Check on the LTC News link. Even if you don't need it now, you're going to. One of your family members are going to. One of your friends' loved ones is going to. And and there's your solution. In 50 states of the country, it's a staggering company. I'm just very proud to have Matt here as part of what we do.
There it is on my phone. 62 Who Knew.
62 Who Knew.
There we go. Yeah. Nice.
And all right, so with only a few minutes left, welcome back to 62 Who Knew with our expert panel, Matt McCann, Jon Thomas, and our expert guest today of the uses of home equity during retirement, Mr. Shannon Hicks. Do you think it would be plausible, Shannon? I'm doing Jewish guilt here because the camera's still rolling. So pack your bags, baby. It's time for Jewish guilt, a Jewish guilt trip, right? To have someone like Matt on your podcast.
You just read my mind. I'd actually like to extend an invitation to Matt because he educated me very well and opened my eyes on long-term care insurance. And then I'd also like to have Jon on as well, either together or separately. But gentlemen, it would be reaching out to an audience of reverse mortgage professionals and lenders, I think, like myself, who would benefit from your insight. Because, be honest, we need more of it. So.
Well, yeah.
Well, we've done duets before, so that's no problem.
Yeah.
You heard of the Captain Tennille? There's our version of it right there.
We'll get the greatest hits. Yeah.
We'll get the greatest hits. Well, that's good. I'm glad to do that. I also want to just say something a little bit about Amada. We already talked about their national joint venture to try and train people to be able to access home equity. But at Amada, quality care is a priority. And I'm not saying that other in-home cares, we all know names of them. I'm not going to mention them because I'm not going to plug people that are not my sponsors. But Amada does lead with their heart. They look for ways to make simple, everyday tasks special. Amada in-home caregivers not only take care of daily essentials like cooking, cleaning, and grocery shopping, that's what you're used to, but they go above and beyond to develop that relationship and make that client smile. You know, when an in-home care person comes into a home, and I have personal experience at this by being my dad's, caregiver almost 20 years ago. May will be 20 years. That in-home caregiver has a very special place in the family. They become instantly part of the family. And how Amada accomplishes this is just incredible. In one case, one of their caregivers, found out that their newest client was a farmer all his life. And on their way to their first appointment to meet the family, brought seeds and things such as that. and they planted things with this man and watched them grow and helped him. And I mean, where do you hear of an in-home care worker doing that? Besides the fact of helping with daily living activities, from going to the bathroom or the shower or making sure you're not taking too much or not enough insulin, to be in the yard planting, because that's what they knew he loved to do his whole life. I was so proud to be affiliated with Amada Senior Care, not just in 62 Who Knew, but you know, of course, in American Pacific Mortgage. So thank you, John. We just love having you here. All right.
Thank you, Mike.
We're back with 62 Who Knew. We're a little bit over an hour, but I think it's been a tremendous show. Shannon, thank you for being here. Any reverse mortgage people that you can think of, Shannon, that should be introduced to John and Matt, please do it.
I think it's everybody.
Yeah, it is.
Honestly.
Can you imagine a reverse mortgage person going, what do you mean you need care and you can't afford it? Let me take you to I'm not an insurance person, no conflict. All I have is a mortgage license. Claire McCaskill's not going to be mad at me. But of course you can access in-home care. Let me take you to a site.
Absolutely.
What an incredible marriage these industries could be. And I've never had an incredible marriage. I'd like that to happen for some time.
No, definitely these, our three areas of specialty should be locked arm in arm. They're so integral to the inevitable process of aging.
Yep. All right. I want to thank everybody for tuning in to 62 Who Knew. We have officially made a decision to make a little change in the podcast, as new as it is. We will be doing 4 episodes a month, as always, but the first 3 episodes of the month are going to be consumer-facing, just like this is, to educate consumers of all types about the greatest services and goods that they can have. But the last show of the month, which is something I'm going to invite you on to, Shannon, and I hope you'll come, is going to be 62 New, the Inside Edition, where we're going to target the show to certified financial planners, independent financial advisors, reverse mortgage professionals, regular mortgage professionals, long-term care insurance agents, and bring up the backside of why we don't accomplish what we're supposed to accomplish. We're going to bring underwriters on. And in the last week of April, we already are bringing on a very special guest who is going to discuss the fractional sale of equity in their home. A term most people are not familiar with, neither was I till 6 months ago. The fractional sale of equity in your home. I don't want to do a reverse mortgage for $100,000 on my $500,000 house. I just don't want to do it. But I'll sell you 20% of my house. 20% of my house, 500 grand is 100 grand. I'll own 80%. I'll have the tax benefits. I'll have everything. Warranty deed, everything. The other 20% partner cannot force a sale, cannot force a refi, but they hand them a check for $100,000 to do anything they want with. Fractional sale of real estate. I don't know if it's competition for reverse mortgages, because I'm just going to say it. I think it's superior, but not everybody can do it. There's still going to be millions of seniors that reverse mortgage people can help. The fractional sale of equity. That's the last Thursday of April on our 62 Who Knew edition. Next week, we have a special guest, probably the #1 speaker on annuities in the United States of America, Mr. Tom Hegna. If you don't know Tom Hegna, Google him. This is going to be an hour of, oh my God. Just sort of like an hour with Matt or Cassandra on long-term care insurance. Just a staggering speaker. He's our guest next week. Thank you to everybody for joining 62 Who Knew, and we look forward to seeing you next week. Thank you so much.